All right, welcome back to Stock Choice with Nick for this week's Midweek Movers live stream. Sorry for the quick delay. Right when I logged in, I got forced to do an update with the streaming platform that I use, so sorry about that 5-minute delay there. But in today's live stream, we'll be going over the general market, how we snap back today after things have been looking very rough. End of last week, got a nice day on Monday, and then it felt like a follow-through day. Not quite a follow-through day because that happens on day 4 or later in a potential uptrend. But up 3% on the NASDAQ, 2% on the S&P 500. We'll cover all the charts in a little bit here, but very strong action today. I did start a couple of positions that we'll cover. But are we out of the woods yet? I'm not sure. I don't know if anyone knows for sure, but what we need to be doing is building that exposure, but using progressive exposure. So when we're building exposure, when we're putting on new positions, we're trying to quickly move our stops up to even so we don't have any actual capital risk on the trades. And then we're using that risk to finance other trades. So say you have a 5% stop on a trade and then the stock gets out, you move your stop to even, and then you could use that 5% risk on another trade, building up your exposure, but keeping the amount of risk that you have in your overall portfolio exactly the same. So if the market does roll back, you get stopped out and you don't have any capital risk. Maybe you're down a couple, maybe 1% or so. So we'll cover that and how I kind of worked through a couple of the trades that I put on today. I got 9 stocks to watch for the second half of the week, and then we'll go over any stocks that you guys want to see. So if you are new to the chat, we do this live stream every Tuesday night. And if you have any charts that you want to break down, we'll be using MarketSmith in this live stream to break down all the stocks fundamentals, group strength, fund ownership, and a bunch of other trading statistics. So if you have a chart request, drop it in the chat, and I'll get going here with the general market look. All right, taking a look at QQQs first. Here, I'll bring this over. Really nice action today. So yesterday on Monday, we never took out the low, I don't think. Let me measure this to make sure. Low 38. Yeah, we never took out Friday's low, which if you remember on Friday, we pulled back, closed just above the 50-day simple moving average, but it was a very large down day. Everything looked terrible. On Monday, we put in that low basically at the open. It was a very, very quiet open on Monday. Never took out Friday's low and then pushed higher, found support at that 50-day moving average, and closed near the high of the day. What I didn't expect was we were going to gap up 1.8%, 1.9%, whatever we did, and then just get off to the races and closing right at the high of the day, up 3%, really strong action. And if you weren't kind of mentally prepared for that gap up, with a group of stocks that you really wanted to focus on, get exposure to if the market was going to get into a favorable environment, then you probably didn't trade today. And for most people, I'd say that's completely fine. After the last 2 weeks, a gap up of 1.8% or so, typically those might sell off in a bad trading environment. So the fact that we closed at the high of the day is giving me a little bit more evidence that Maybe this was the low already. Maybe we put in the lows, and to start building that progressive exposure, try to get my money in the stocks that were showing the best relative strength while the market was pulling back. But it gives me license to kind of go after some new trades. So that was the QQQs. Let's check S&P 500. S&P 500 has been doing better overall since compared to the NASDAQ. Since NASDAQ is tech heavy, a lot of tech stocks over the last 2 weeks have been getting decimated. So it's no surprise that the S&P 500 is holding up a little bit better. Let's see. Yeah, the 50-day moving average was already, at the 50-day. But today, gapped higher. We're well above the 50, the 21, and the 8-day EMA. So all those moving averages and the 200-day, they're basically all in the right order now, and everything is back to an uptrend, closing at the high of the day today. Let's check IWO. This paints a slightly different picture, and I use the IWO chart the most to kind of correlate with my trading because this is the Russell 2000 Growth Index, and I usually trade growth stocks only. So you can see, I go over this every live stream, but nice move December to February, and then basically a year of chopping sideways. If you weren't quick to put on exposure on these turning points and then sell into strength, you had a rough year. And that's something that I'm just really starting to take into my own trading. I read about progressive exposure in Mark Minervini's books, and then when in practice, I'd be putting on like a 5% of my portfolio trade. And then if that's working, then I add another 5% trade and then slowly build up to 100% invested. And by the time I was 100% invested, it was time for the market to pull back. And I was getting hit the hardest when I had the most capital in the market. So this time around, I try to use much larger position sizes, but with very, very tight stops to basically say, the market's either gonna roll over immediately or it's gonna get out. I'm gonna be able to move my stops to even. And if we trend for a couple days and I'm already 50% invested, then I can make some progress on my account. So that's something that I've been doing differently. In October, when we had the follow through day, it was really nice to jump on a couple names to work. Now I still need to work on selling into strength to avoid those pullbacks. That's a personal journey of mine. Maybe you're somewhere else in your personal journey. Everyone is in a different spot in their trading. So we always see people on Twitter talk about the trades that they're making with the percent returns that they have on their account. But it's great to learn from them and learn their process, see what you could take from their trading to add to your own. But you don't want to be copying people, and you don't want to be comparing to people because they've been either doing this a longer time, taking it more serious. You need to focus on where you're at in your trading journey and what's the next 1 or 2 steps that you can take to improve your own trading, not what someone else needs to do. Back to the chart, kind of a tangent there. IWO, that sold off the worst. It broke both the 50 and the 200-day simple moving average much quicker than the NASDAQ, which just bounced at the 50-day basically. But yesterday put in a low, so took out Friday's low and then closed high in the range. Today we gapped higher, up, 3.3%. But we're still under the 200-day simple moving average, still under the 50-day simple moving average. So because I trade growth stocks and we're under the 50-day, there is still reason to be cautious. Like the NASDAQ and the S&P 500, they're very heavily weighted by the Tesla, Nvidia, which had an amazing day today. Facebook, Apple made all-time highs today. So they're very heavily weighted with those names, where IWO does a little bit better job of showing like market breadth as well. I wanted to show GMIAB. So this is the NASDAQ here, and then also the advanced decline line. As you can see, we're just starting to put in a higher move with the advanced decline line. If you correlate my trading to the advanced decline line, it's very, very accurate because I was so slow to put on exposure with multiple names instead of trying to focus a larger percent of my portfolio in the top kind of names. But if you were kind of spread out over the last couple of weeks, it was a really, really rough couple of weeks unless you had stops and got out of that. But maybe we start making the turn here. We'll see. What else? ARKK, that's another one that I usually go over. Absolutely fell apart here. Really good short opportunity where we built a ledge right at that 50-day simple moving average around 125 and then jumped down, built another ledge at 103, jumped down. So a couple shorting opportunities, but the thing with shorting is you have to act a lot quicker. You have to take profits a lot quicker, move your stops to even quicker, because after an oversold environment like this, where we went from 125 to, 89 or something? 88. So 125 to 88, that's over a 30% decline in just a couple weeks. So you're kind of expecting a bounce. And maybe that's all today was, maybe that's all yesterday was, is kind of a bounce to moving averages, and then we roll over again. But you can't start a short position on Friday after all that carnage already, because just like buying a stock after it's already extended from a base, already extended from a breakout, you're more likely to get stopped out as just a normal pullback or a normal bounce would take you. So those are the kind of general market indexes that I wanted to go over. A couple trades that I put on today, EXTR. So this is one that I had on my breakout watch list going into the week. I put those videos out on Sunday usually Sunday morning, trying to get that out a little bit earlier each week. But this was a name that was holding up extremely well while the market was selling off. It's in computer networking, so that's the 33rd strongest group out of 197. So we have group strength, we have relative strength rating 96. And this also has fundamentals, so composite rating of 95, accumulation distribution A-, earnings per share up 278, 533, 133, sales up 21, 29, 14. So it's checking all the boxes. Within that strong group, it's the strongest stock on relative strength, accumulation distribution, and number 2 on composite rating. So with trading, all it is aligning as much probability as you can and then managing your risk from there. This was checking a lot of the boxes, especially that relative strength while the market was selling off. Sure, the daily bars were getting wider and wider here. That makes sense. There was a ton of volatility in the market. But notice how we continue to close over the 21 EMA while the NASDAQ and the S&P 500 lost the 21 EMA. So a stock pulling back to a shorter term duration, as long as it's in an uptrend, is a way to identify relative strength, along with lower volume pullback days, heavier volume days that it moves out. So this was a main focus of mine. When I woke up, checked my phone, wow, we are gapping up 1.8% on the NASDAQ. I was like, this could be a potential start of a new rally. Let's kind of look at our main focus stocks and try to get money in there with risk management in mind. We're not just buying everything randomly because the market's up 1.5%, whatever. We're trying to still manage our risk in the top names where if we're wrong small, but if we're right, these are stocks that have been showing relative strength. And once that market pressure down gets relieved, they can start running higher. So long explanation, but that was my thought process of selecting this stock as one of the stocks to trade. And also we had this nice pivot through here of Friday's high, what was that, 1376. So my buy point, we opened a little bit lower and then took out 1376. I think I got filled at 1377. So that is my entry point. Put 25% of my position or my portfolio on that trade with a stop at the low of the day. So the low of the day at that point was 1368. So really a 10-cent stop, less than a 1% stop. If I'm wrong immediately. So like this got through that buy point maybe 30 minutes or so into, maybe even less, maybe 15 minutes into the trading day. And we gapped up so high, I expected the indexes to just pull back immediately because we were in a downtrend. We bounced, we gapped higher. I assumed that gap was going to get sold down. But the fact that the NASDAQ was moving higher right from the get-go, and this went through the buy point instead of just rolling back into this congestion area, gave me some confidence to put on the trade, but still with a stop loss under 1%. Very manageable risk. So my total capital risk was 25% of my account times, say, 1% for easy math. So 0.025%, a quarter of 1% of my total capital at risk, even though I had a 25% position size on this. So if it works, that risk reward is heavily asymmetric and in my favor. And we did, this got going, pushed out. Once it got through 14, I moved my stop to even. So then I take out all of the capital risks that I had on the trade, and we're just letting it go from there. It looked like it was going to get really going up to 1425, pull back, close still above 14, round number, close at 1401, good sign. So that's EXTR. Haven't taken anything off the trade, kept that on today. I only put on 3 trades, so we'll go over those really quick. What was the other one? Roblox. This was a losing trade that I put on. Let me switch this up to 15 minutes. Actually, let me try 5. Okay, so here is the action today. Roblox, actually, let me go back to the daily, sorry. Roblox had been a market leader, broke out on super heavy volume after stellar earnings. Well, not actually the earnings per share, but sales were up 100%. Stellar earnings reaction, we pulled back a day and then just ripped higher. So this was a name that if the market starts to work again and tech starts to work, a name that I wanted to focus in on. So with that said, let's go to the 5-minute chart. We opened and then we immediately pulled back and set this really nice pivot. So these are 5-minute candles. So 10-minute pivot through here. I think my entry was 1336. So Yeah, right through that area's high, got filled, started working immediately. I put my stop under the low of the day at 15, I think I did 14.99, 114.99, just below a round number. It got out, and then I moved my stop up a little bit to 15.99. So basically 37 cents risk on the trade. I was able to put another 25% position on, and it got out. My risk reward, super asymmetric. And I mean, this really looked like it was going to get going, but then pulled back, undercut $16, went to 15.5, and I got stopped out for, I think it was like a $40 loss, $37 loss, something like that. But another way I was able to put a very large position size on with a very small amount of risk, and it basically was a test position risk-wise, while still having a large position size on. So if it does work and we start to trend higher for a couple days in the market, I'm getting a bunch of exposure on with very low risk. And if it starts to trend, then we're making progress in the account. Unfortunately for Roblox, it didn't work, got stopped out. That happens, especially with that tight amount of risk. This is going to be a name that I cover in the watch list because it's something that I'll be looking at tomorrow too. You can always get back into stock. So like, I see this a lot on TikTok where people are like, oh, I'm stuck in the stock. You're not stuck in the stock. You could sell and buy back the next day. Maybe you have to pay up a little bit to get there, but not having that overnight risk when you're already down 7% or whatever on the trade, it's always better to sell, get out, get your money safe, get your mind right, and then re-enter if things are setting up again. But that was Roblox. And then the last one, let's see. Did not write it down. All right, let's get into the watch list names instead. So first we have DLTR, Dollar Tree. Not a name that you would expect to really get going, but I think this had something to do with the news where they were going from $1 to $1.25. So bringing up their revenue probably with that extra quarter per item. Right now, it's in a B- group strength rating, retail discount variety, 93rd strongest group out of 197. Within that group of 8 stocks, it's second on relative strength, has a relative strength rating of 95. Accumulation distribution, strongest in the group, and then midway on a composite rating. Composite rating 73, that's a little bit lower, but accumulation distribution of B rating, nice. Looking at earnings, that's actually deteriorating, going from plus 19, plus 26 to minus 23 and minus 38. Sales, plus 7, plus 3, plus 1, plus 4, basically around even there. Then after-tax profit margin is improving a little bit there. Fund ownership starting to decline actually from March of 2021 to September of 2021. We did get some heavy volume up days as we're starting to ascend here. Is that institutional ownership taking positions? Maybe. But what I like about this, again, I'm going to go back to this relative strength a lot because that's really, excuse me, what I'm focusing on the most, because relative strength is based on price only, and price is the only thing that pays us, right? Like price and volume are the most important things to monitor in trading. So the fact that relative strength is based purely on price, that's something to keep in mind. Let's check industry, we covered that, and yeah, so let's jump to the other chart. Let me put on volume profile on here too. Oops. All right, so from the low here, we had a very strong move, 77% up. Since then, we've pulled back 11%, not bad. Just in between this is the 8-day exponential moving average, then we have the 20-day simple here. Couple down days, then inside candle, double inside candle, higher highs, higher lows on Monday, and then an inside candle today as well. Is this gonna be a name that completely rips higher? I am not sure, but I do like the relative strength that it's been showing as the market rolled over. Not a tech name as well. Trying to have a little bit of exposure in non-tech names. I know semiconductors have been basically the hottest group, and that's what I put. I just remembered the other name. I just, sorry, well, let me, ON, yeah, there we go. Semiconductors has been a very strong group at the moment, but having some exposure in some non-tech names, probably a good thing in case today was just a oversold bounce and then we roll lower. So this is Dollar Tree, looking for a buy over 140.20, the high of yesterday. Maybe there's a downtrend line that you can work in here. Maybe just a break over 139.17. But even with a buy over Monday's high, stop at the low, that's still a 3% risk. Ideally, you could keep that risk to 1-2%, but 3% is not bad. Let me go over the ON trade because I just saw it in my notes. So this is in semiconductors. This was the other stock that I got working today. 9th strongest group out of 197. Earnings per share rating 93. Group strength rating A+. Overall composite rating 99. Very strong there. Within the A+ group, there's 40 stocks in that group. It was the number 1 stock on relative strength, number 1 on composite, number 2 on accumulation distribution. Had a 98 relative strength. But this is one that was kind of megaphoning out, and there was no clean entry come Monday because this is already kind of extended on Friday's move. So when Monday actually pulled back and had a down day, bounced at that 21 EMA, I just used a break over Monday's high. What was that? 64.05. Got in, I think, 64.07-ish. And then a stop at the low of the day. The low of the day was 63.17. I put it at like 63.15, just a couple cents under, just in case they were targeting exactly the low of the day. So very small risk on the trade. This one has been working out a little bit better than EXTR, closing in the upper half of the range and its highest closed yet. And I've already moved my stop to even on this, so I've taken out that initial capital risk. So basically going into tomorrow, I don't have any initial capital risk. If everything rolls back and hits my stops, then I get out for break even. Maybe the market needs to calm down a little bit, and then we go from there. But this was another stock that it was on my breakout watch list. It fit a lot of the pieces of the puzzle that you look to add probability to your trade to. And then after Monday's kind of shakeout, it gave us that clean pivot with a break of Monday's high, and we didn't gap up too high where we couldn't manage our risk against the low of the day, and in a strong group. Lots of boxes checked, and that's why I took that trade. All right, let's get back to the watch list. Next we have GFS, also in semiconductor, so 9th strongest group. Within that group of 40 stocks, it's the 3rd strongest on relative strength, 18th on a composite basis. Earnings have been negative up until this last quarter, so we have 111% earnings per share growth. Sales went from minus 23 to plus 3, plus 23, and then plus 56, so we're seeing acceleration of sales. And then after-tax profit margin went from minus 49, minus 9, minus 2 to plus 2, so we're also turning around the boat there. Fund ownership, we don't have any fund ownership information because this IPO'd after September, and that's when the last time that the fund ownership information was in here. Got a composite rating of 88 and a relative strength rating of 98 right now. GFS. So this is a look at the daily chart. You can see great relative strength as the market's been pulling back. This bounced at the 20-day, put in an inside candle on Monday. And this was one that I didn't take myself, but you could have taken the trade as it was breaking through yesterday's high. Right now it closed right on that after took out yesterday's high, moved 4%, and then squatted back. So that is a little bit larger of a squat. If I'm going to put on the trade tomorrow, I'm going to be looking to sell some into that move and then put my stop to even, take out that initial capital risk. But this is a name holding up pretty well in a very strong group. Let's see if we could find a downtrend line to work with. I don't think so. Yeah, so just through here, 68.75, 68.76. I think that's yesterday's high as well. No, yesterday's high is 67.96. Let me mark that. Yeah, so if we open lower and then take out, I would look at the high of that move. So 68.17, not a perfect entry. Ideally, we get a couple days of this trading sideways where these daily bars actually tighten up. You can kind of see a flag forming there. So a couple more days improves the trade odds. Maybe second half of the week, this starts turning up, and it's another one to add to the watch list. That's GFS. Next, we have INTU. This is in computer software financial, 36th strongest group out of 197, A- group strength rating. Within the group of 39 stocks, this is number 1 on relative strength and composite basis. Relative strength 96, composite rating 98, both very, very strong. Accumulation distribution a little bit lower with a B-. Let's take a look at earnings. Went from -41, +35, +9, +63, solid there. Sales -7 to +39, +41, +52. So we're seeing acceleration of sales. After-tax profit margins, 12, 40, 20, and 20 year over year. And fund ownership is increasing on this, always a good sign as well. Going to the chart, INTU. Another one that found some support right on that 20-day moving average, maybe the 21 EMA or 23. Basically, whatever the midterm moving average is, finding some support there. You're seeing volume come in a little bit. I don't think today's volume was that light. Yeah, today's volume was still above the 50-day average, but a little bit lighter than previous moves. Similar to GFS, this would be ideal if we pulled back, tested that 8-day EMA, tightened up a little bit, and then broke out in the second half of the week. But there is a downtrend that you could use, which is just if we open lower and then take out the high of the day, that's a potential buy point. Yeah, no super clean entry. We're definitely looking for some sideways action to improve the trade odds on this, but really nice move today in a strong group, and really strong earnings per share, sales growth, after-tax profit margin, putting the story together. It's INTU. Next we have Lifetime, which is in leisure and services. It's a fitness gym. It's got an A group rating right now, kind of a reopening play. We saw EDR also break out the last couple of days. That's been a reopening play as well. So kind of keeping that in mind. Composite rating 79, relative strength rating 92, very strong on a relative strength basis. Within that A group strength rating, 43 stocks make up the group, 7th strongest stock in that group on relative strength, 12th on composite basis. Fund ownership, IPO'd after September, so we don't have any of that information. Sales continue to be negative, so NA on earnings. Sales went from -52, -39 to +301, +67. Again, as things are starting to reopen a little bit more. And then after-tax profit margins, when they weren't allowed to be open, -37, -61, -23, -11.8, 12%. So starting to get that back in order. TH. So we did shake out under the 20-day moving average on Monday. Really strong move. I want to measure this. So we had a 12% move, squatted down to 8.4. Where the reverse happened today, we opened, tried to push lower, actually went red on the day, and then rallied to close in the upper quarter, upper third of the daily range, and an inside candle. Not quite an Oliver Kell wick play, just because we did break under the closing price of yesterday, but kind of in that concept, closing in the upper half of this wider bar. Let's see the 10-day, so looking at the 10-day chart with 15-minute candles, you can see a pretty nice clean pivot through here to work with. Breaking over the second to last 15-minute section, 21.37, potential entry point here. Then you can manage your risk. Let's see, how low can we go? Half stop under here is about 1.5%, and then under the day's low is 4.4%. That's still not bad, depending on what position size you're putting on, but you can see nice clean pivot to work with. in a stock that's holding up pretty well, working on Monday. It's a Lifetime. Next we have Roblox. So we covered my entry. We didn't really put the pieces together like we did with ON and EXTR. So with Roblox, right now it's in a very weak group, but it also has that metaverse theme to it, which MTTR broke out today. Well, not broke out, but bounced very strong. I think it was up 10% or so. Let's check that really quick. Up 13%. So with Roblox, holding up a little bit better, already above its 8-day EMA, closing slightly under the 21 EMA and in the lower quarter of the daily range. That part is not ideal, obviously, otherwise I wouldn't have been stopped out. But this is a name that did break out on super heavy volume, and some of the pullback days, some of them came on heavy volume, some of them came on much lighter volume with that shakeout there. And ideally, this just trades sideways, tightens up, but a couple areas that we can manage risk against. Sorry. A break over this 120 area, that could be a potential entry point. So just a break over today's high, 120.16. Stop of the low there is 4.4%. But when we went into the 10-day chart, I think, yeah, we saw a downtrend line we can work with. So at some point, if this downtrend line also meets up with just a break over some flat top entry point, then you have confluence of indicators, two different systems buying at the same price. That increases the buying supply and increases the odds of the trade actually working out, the stock breaking out, so you can then move your stop to entry. So the lower you get into the price, the tighter you can keep your stop under the day's low, but also the higher probability that it will just pull back, shake out that stop before it's actually ready to move. So you're always kind of managing your risk of total downside risk and your probability of it being a losing trade. So that is Roblox. Let's check Rivian. This was a name that really got going on Monday after respecting that round $100 number. It does have earnings in 9 days, something that MarketSmith is good to point out because sometimes you don't remember, you don't check. So every time you open MarketSmith, you can see right when they have earnings next. 9 days might be a little bit too short for some people to trade. If I can get the stock to move out 10%, 20%, then I can hold at least a piece into earnings. And with a name like Rivian, it can run pretty quickly. So with 9 days to go, I have no problem trading it, but some people might, and that's fine. Then you don't trade it. It's got a group strength rating of A+ in auto manufacturers, which is the 4th strongest group out of 197. Within that group, it's 6th strongest on relative strength, 11th on composite basis, but does not have any earnings, sales, or after-tax profit margin to work with. So very much kind of a momentum play. With that being said, we have to check the chart. RIVN. Since we're let me go to the 3-month chart. So these are daily candles. You can see had a really nice kind of IPO run here. Let's measure that from low to high, about 89%. But we pulled back, and we pulled back very quickly. In 2 trading days, it pulled back 33%, and within 2 or 3 weeks, pulled back 44% from the highs. So that's why we don't want to chase extended stocks. We want to wait for them to pull back, tighten up, so we can manage our risk against. One thing that I wanted to point out was where support was found as this was pulling back. The low of the day on Friday was $100 to the cent, not $99.99, $100, 00 cents. So in my mind, that area is getting supported. The next day on Monday, it also pulls back and makes a low of $100.32. So just before it gets to that $100 mark, there's a bidder supporting that area. So that's an area to watch. I didn't take the trade as a pullback against that area just because the market on Monday still lower. Better than Friday, but still under all the key moving averages. We didn't get the gap up and follow through that we did today. So it was still a time to kind of stay in cash for me at least. So I didn't put that trade on against 100, but in a more favorable environment, that's something that you can look to do. Today, because it was already up, 12% yesterday? Yeah, up 12% yesterday. Got out, gapped up a little bit, pulled back, closed right on the 8-day EMA, not doing anything wrong, down 0.5%. But then now we have today's high to work with as a potential buy point, and also kind of the main part of this volume shelf as well. So break over 120.21 or just 120, nice round number, potential entry point, and then you manage your risk from there, maybe with an intraday stop. That is Rivian. I only got 2 more for you guys, so if you have any chart requests, make sure you drop them in the chat right now. Next we have Build-A-Bear. All right, so with Build-A-Bear, group strength, it's in retail leisure products, 23rd strongest group out of 197 groups. That's an A group rating. Within the group of 14 stocks, it's number 1 on relative strength, number 3 on accumulation distribution, and 7 on composite. It's got a 99 relative strength, strongest market Smith gives, and a 95 composite rating. So even though this is the kind of midway point of that strong group on a composite rating, it has a 95 composite rating. It only goes up to 99, so that's very strong. Let's take a look at fund ownership. That did dip into what was the low? June of 2020 at 61. Since then, we've been steadily climbing. Now we're back up to 76. Checking earnings, up plus 18, plus 177, plus 152, plus 245. So acceleration of earnings. Sales went from minus 10 to plus 97, plus 135, and plus 27. And after-tax profit margin, plus 8, plus 10, plus 7, plus 6. Build-A-Bear was a name on my watch list today. Just looking for a break over, $21? Right through here. So yesterday we closed just under that area at 20.89. My thought process going into the day was if we opened just kind of flat on the market and then we pushed through that buy zone, because it was at a previous high, and still we broke out on earnings, haven't even tested the 8-day exponential moving average outside of that first earnings day. So that's showing good relative strength compared to the market. So I was just looking for a break over 21. Unfortunately, we gapped up. We pulled back to that area. I didn't manage my risk against it. It's something that if I didn't have 3 stocks going at the time with Roblox before getting stopped on that, I wasn't already 75% invested. This was a name that I could have managed my risk kind of against the low of the day after we broke back over $21, because the low of the day was $20.91. You could have gotten a ton of risk against that area once it came back over. Not a trade that I ended up taking, unfortunately, because it did rally. It's showing up 2.5% today, but it closed at 21.86. So that would have been a 4.4% move. So we'll see if this extended hours holds. It doesn't look like it since there's a 5% difference between the bid and ask. So if this pulls back to this area again, so now that we've broken over the 21 round point, look to manage risk against that, because it was basically supported, again, the low of the day today, 20.89 at this area. And last I have is YELL, a little bit thinner on average daily volume, so about 900,000 shares traded, under a million. I know some people don't trade stocks with under a million. That's fine. My account's not that large. I don't have to worry about the liquidity issue there. So still a stock that I'm watching. It's got group strength, A+, in transportation trucking. That's the second strongest group in the entire market right now. So we have the group strength aspect of it. Within that group of 19 stocks, number 1 on relative strength, number 2 on accumulation distribution, weaker on a composite, but again, only price pays. So we're really looking at that relative strength line. Relative strength of 99. Composite rating 88, so it's not a bad overall composite rated stock either. Accumulation distribution, A-. Earnings have been negative up until this year or this quarter, where it was 500% year over year against a negative earnings per share. Sales went from 0, +4, +29, +10. And after-tax profit margins have been negative and basically flat the most recent quarter. Fund ownership on this has been steadily climbing from 81 in September of 2020 to 171 in this September. All right, so looking at a 6-month chart, really strong move out of the gates here, about 180% move up. Now, because there was some, I hate when it does that, because it has some previous resistance area here, most people will look at this and be like, okay, 180% up, pulled back 19, 18%. That's a high type flag. Because there's previous resistance at this area, it's not just a pure flag up. I would measure from the top of the cup higher, which is still a 53% move. So very strong. And you can add this if you want, treat it as a high type flag, whatever you'd like. But because it has that previous resistance, I don't know if I would treat it like that. These daily bars are getting wide. That's not usually a good sign when the market's just in an uptrend and the daily bars of the stock that you're looking at. You don't want that type of volatility. But this was more volatile because the market itself was more volatile and crashing under the 21 and at the 50-day moving average. Well, this never even got close to the 50-day. On Thursday, we bounced higher. Friday, we bounced on the 20-day, closed above the 8-day EMA, another good relative strength, while the NASDAQ was down here by the 50-day. This was still above the 8-day EMA. Monday, we actually flushed lower, which was concerning. Did not put the trade on. No reason to. Today, if I had this, I didn't have this stock on my watch list until today when I was scrolling through Twitter, saw this come up and started to build a case for it. So this could have been a nice stock to buy today. Went up 8% from that move. Could have sold some into strength, managed your risk against the low of the day. What I'm looking for, you have 4 daily highs basically through here. 1392, 1394, 1391, 1391. So around that 1392 range, if we can open lower than that and then take that area out, potential buy point there, and then you will have to manage your risk kind of intraday. And really, because we just kind of broke out here, it would be basically if we open lower, that would be the low of the day that I would try to target. Because anything over that, 1.3%, I mean, we're not using the low of yesterday, that's 7%. That's a little bit wide, especially in the market that we're in. Yes, we did just gap up. Yes, there's a lot of strength in the market. But the last 2 weeks, everything got demolished. Or not everything, but most things, especially tech, got demolished. So got to be a little bit more careful. Got to keep those tight stops. So if we're wrong small. That's YELL. Those are all the stocks that I wanted to cover. So I'll jump to the chat now to see what you guys want to look at. And if you haven't put a stock in the chat yet and you want to break it down on MarketSmith, drop it in the chat. So I see MTNR. Let's take a look at that. MTRN. Matreon. So I've never seen the stock before. So this is a good example of what I do when I first see a stock ticker that I want to look at. So earnings per share rating, 94. That's great. It is in a weaker group right now, 119 out of 197. That's a C group rating. So in my mind, I'm like adding probability, subtracting probability. Are we breaking out on heavy volume? That's adding probability to the trade. Are we pulling back on lower volume? Adding probability to the trade. We're just kind of building conviction, and then we still need to manage our risk because trade to trade, everything is completely random. But if you have an edge over a long period of time, law of large numbers, when you have the edge, just like a casino, that's how you make money. So we still have to defend against downside risk. B plus accumulation distribution, that's good. Composite rating, 91, that's good. Relative strength rating, 89, that's good. Taking a look at earnings, +6, +110, +91, +100, that's awesome. Sales, 21, 28, 37, 35, very strong. After-tax profit margin, still increasing, still improving those profit margins year over year. Within the group of 28 stocks, it's 4th on earnings per share, relative strength, accumulation distribution, and number 2 on composite. So even though it's in a weaker group, it's a strong stock within that group. Makes engineered material systems for defense, energy, medical, aerospace, and electronic industries. It's metal fabrication. All right, so let's check fund ownership. That had kind of been bouncing around, kind of continues to bounce around. 353, 392, 406, back to 396. This breakout happened after September, so chances are we're bouncing back 406 or something around that area. Let's check the chart for a potential entry point. I'm liking this so far. MTRN. Oh wait, and let me check average volume. Ooh, good thing I checked that. Average volume, only 86,000 shares traded. When that happens, chances are the stock doesn't get supported at key moving averages like a Tesla would, like a Rivian, something that's more liquid that institutions are trying to add to. With 86,000 shares traded as your daily average, you're going to see a lot of slippage when you're entering the stock, a lot of slippage when you're exiting, and more gap up or down risk. Let's see. With that said, so at this moment, with the market where it's at, I don't want to be trading illiquid stocks. I would rather focus on the more liquid stocks anyway, but did have a really nice pop here, 41%. But then we gap down, we press lower, tried to get going on December 1st, could not get going. Basically found resistance around the 8-day, 10-day, closed at the low of the day. Got going a little bit, 1.5% today, but compared to the other stocks, yeah. There's thousands of stocks to trade. I like the fundamentals. I don't like the group strength. I don't like the illiquidity issue. And the fact that we gap down here and we're still under the 20-day moving average, I just think there's stronger stocks out there in the market. So why not focus on those? But not a bad stock overall, but I would stay away from it for myself because of that liquidity issue. Let's see, what else do you guys want to see? BLCN. Tracking the Siren NASDAQ blockchain economy. So this is an ETF. I've never heard of this ETF before. Let's check. Yeah, so it's under the 50-day, under the 200-day. A personal rule I have is I don't buy any stock under the 50-day or under the 200-day. We're also under the main part of this volume shelf. So as we do bounce up here, you're likely to see some big resistance at the 50, at the 200-day, and where the most traders are trapped. So a lot of traders can get a 9% bounce if they're buying off the lows here. And then all these people that maybe got trapped in here or trapped higher, it bounces up here and they can either take the trade off break even or down only 7% versus 18% if they bought at the high. So I don't buy under those areas, but expect at least a little bit of resistance through here. If we just blow through this area, the 50 and the 200 and the volume shelf, I mean, that'd be super bullish, but I'll have to look more into that ETF, like what stocks make that up. I haven't seen that before. Thanks for pointing that out, Robbie. Next we have OSTK. Traded this a bunch in 2000. Really strong move up here, but I mean, looking at the weekly chart here, this is just basing. Looks like it was going to get out. Then we pulled back again. So really, I mean, even the monthly chart, look at that flag on the monthly chart. It's really taking its time to set up. So let's see if Tesla had a similar. So months of basing. I'm not trying to say this is going to be like a Tesla-like move, but the longer the base, the longer the breakout typically. And it has been basing out for, I am on Tesla. OSTK. It has been basing out for a very long time now. But do we buy here just randomly in the base, knowing that this has already gone through how many months? Let's see. Peaked 14 months, 15 months, maybe even more. No, like I don't want to buy randomly in the base here. I want to buy the breakout of the base. You can see around 112, that would be the area that I would be focusing on. Once you get up there, you're above the 50-day, above the 200-day. Yes, you miss out on 80 to 110. And as a swing trader, because I'm not trading this, I'd be trading something else that's stronger right now, that has better risk reward potential and probability. And then when it does get up here, then it goes to my main focus. So because I miss out on this, I might be making money elsewhere, trading other stocks that are already breaking out from bases. But once it gets up into this area, I want to have alerts set because it's been basing out for so long, and the bigger the base, the bigger the breakout typically. Earnings per share, plus 136, plus 265, plus 55, and then minus 22. So we're starting to see deterioration of earnings year over year. Sales 84, 94, 4, minus 4. Same thing with sales. And after-tax profit margin kind of bouncing back and forth, but always improving, which is a good sign. Fund ownership on this kind of bouncing around as well from 329, 409, 407, 375. We're basing out here. Once we get out of this base, maybe fund ownership will increase there. Composite rating 66, that's on the lower end. Accumulation distribution, C on the lower end. Earnings per share rating 34 on the lower end. Group is weak. Within that group, it's the third strongest stock. It's got to get a little bit stronger for me. But overall, it's a stock to watch. Like have alerts set at that like 108, 106 area so you're ready for a potential buy if it breaks 112. But just not something that I'm fooling around with randomly in the base as a swing trader, as a breakout trader. We'll see. We'll see it when it comes up. Let's see. Yeah, I don't know when Apple's going to pull back. Very strong move. This was already showing great relative strength while the market was pulling back. Kind of the last stock that was holding on when everything was kind of getting demolished. So the fact that the overall market pressure got relieved and then Apple popped to make new all-time highs doesn't surprise me. It would be a name to focus on if we do get a couple days of a pullback. Maybe this pulls back to the 8-day EMA around 164. Then we can manage risk there. But I'm not just buying into this extension already. Even though it's showing great relative strength, I would rather kind of like pull back like ON did for a day, pull back to a moving average, find some support, and then buy a break over the daily high. I don't want to just buy as it's already extended. But great relative strength, definitely a stock to keep on a watch list. Skin. Yeah, this was a stock that I was trying to hold for a longer term, so not like in my trading account, swing trading account. Trying to hold a little bit longer term because it had this great move up, longer base, thinking it was going to be a larger breakout. And then when we broke under the 50-day simple moving average, I cut the trade there, put it back on when it reclaimed it. So I don't know, lost a couple pennies for that area. And then when we broke again the 50-day simple moving average, and this time on heavy volume, I was out. I don't like to own anything under their 50-day moving average. If it's going to be a market leader, if it's going to be one of the strongest stocks in the market, it's going to get back over the 50-day moving average. And that's where kind of I'm at right now. At this point, we're megaphoning out. Maybe it's going to be a little bit easier on this one. So you can kind of see the megaphone pattern here, right? Everything's getting wider. Volatility is increasing. And we did, if this is the base, 1 touch, 2 touch, 3 touches being supported. We had a base failure. We bounced back. And then right now we're back into the base. But similar to, what stock was that you guys wanted to see? MTRN, I think. No. BLCN, the ETF. We have resistance at the 50-day, 20-day, right around the same price, and the main part of the volume shelf. So if this gets going, 19%, you're likely going to see some selling, and then maybe a breakout. So I want to give it some reaction to that 50-day, that volume shelf, and then a breakout before I try to trade it again with SKIN. I was really disappointed when it did break the 50-day again because I thought we had a good leading stock. Let's see, Dutch Bros. Whoa, something's going on. There we go. Yeah, Dutch Bros was awesome to trade in October, and then it completely fell apart, and now kind of going through an IPO base probably. Got a relative strength rating of 94. That's great just because it IPO'd and immediately took off. B- group strength rating, retail restaurants, 87 out of 197 within that group of 53 stocks. 10th on relative strength, so not in the top 5. Ideally, you can focus on the top 5 of strong groups if you can. Even with a relative strength of 94, that's an impressive group. It's lost its luster recently, but composite rating, 4th out of 53 stocks. There's a Dutch Bros right next to me. Fundamentally, I love the stock. They print money. There's 20 cars in their drive-through till 9 p.m. I don't understand it. I don't love the coffee. But this is where only price pays. 20 people can be paying for coffee constantly at the store or at the coffee shop next door to me. But if the price is doing this, I don't want to be involved. I only want to be involved as it's breaking out, as I can manage my risk against a daily low, an intraday low, something like that. Until it gets back over the 50-day simple moving average, I'm not interested in it. But when it does get over the 50-day and we have earnings per share growing, sales growing, after-tax profit margin growing like this, and we can start putting those pieces of the puzzle together, then I'm very interested. But until we get over 50-day, which is at 57 area, not so much. SIMO. Yeah, that was on, what a breakout today. I don't even think this was earnings, right? I haven't had a chance to look into why this broke out so heavy today, so if you know, throw that in the chat. But this was one that kind of had the 50, 20, 8 all at the right, or all at the same price, got going and actually bucked the trend completely. It was up on Wednesday, up on Thursday, up on Friday while the market was deteriorating and selling off, closing near the low on Friday. This continued to buck the trend. So on Monday, closed right at the high of the day. That could have been a potential buy point, maybe just like right into the close. But with the market the way it was before we gapped up today, it would have been an aggressive entry. But then we gap up. This gaps up over any potential buy points. Maybe you can manage your risk against the low of the day, but I mean, you can barely even see it on this chart. Really strong move. Let's go SIMO. Yeah, super strong move, 15, 16%. I think this is all-time high. Let's check 5-year. Yeah, all-time high for the stock. Great move today. I don't think it was on earnings. I need to look into it. But tons of good volume, closed right at the high of the day. You can't say anything bad about this. It started showing good relative strength and then just took off. Am I buying up here? No, absolutely not. I'm waiting for it to flag out, give me a better place to manage risk against. At this point, we're 14% extended from the 8-day EMA, 19 from the 20. That's way too extended to try to start a new position on, but if it pulls back, tightens up, we can manage our risk, then that's great. Definitely a stock that I want to keep on a watch list, but don't want to buy it as it's already extended. You didn't buy Zim. I actually did buy Zim yesterday, but as the market pulled back a little bit going into the end of the day, I just scratched it. We weren't in a very favorable market until today's gap up, so I thought no reason to hold any risk overnight. So I tried a small position on it. I would have to check my notes. It's either a scratch trade, down $20, up $20, something like that. But I did try to trade it yesterday, cut it at the close, and then of course we gap up today, unfilled gap, didn't take that trade. It was a name on my watch list, but a little bit stronger than the shipping group right now. So Zim holding up great, but shipping is the 142nd strongest group, so D plus group strength. So instead, I was trying to put all the pieces of the puzzle together. So that's why I traded ON, It's in the semiconductor group, 9th strongest out of 197 compared to one of the weaker groups with ZIM. ZIM could have worked. I mean, it did work today, up 4%, and found resistance at 60 for the second time, or an almost third time here. So if I'm trading the stock, I'm looking to take some off into 60 unless we tighten up for the rest of the week, and then 60 is a breakout like buy point. But 3 times now, sellers have stepped in right at $60, even before here, 60.30. So this $60 range is the selling range right now until we clear that, close above that. But yeah, just a name that I've been watching. It was a good shakeout under the low. Did trade it yesterday, but took it off because I didn't want the overnight risk. Unfortunate for me, but got my money in a couple names that are working fine. So SGH. And we just hit the hour mark, so we're going to cut it after coin here. SGH, computer data storage, false breakout on Friday, closed at the low of the day or near the low of the day, still over the 21 EMA. Good shakeout on Monday. SGH, let me write this down because I want to add this to a watch list. Earnings in 28 days, that's fine. So B plus group strength, B plus accumulation distribution, 97 composite rating, 95 relative strength, all good things. Earnings, really strong. Sales, accelerating. After-tax profit margin, accelerating. That's all good things. So that's code 33. That's a Mark Minervini term. Acceleration in earnings per share, sales, and after-tax profit margin. Fund ownership increasing. Within that group, it is the second strongest on earnings per share, relative strength, composite, all good things. Thank you for bringing this up. I don't know why I didn't have this on a watch list before. SGH. So yeah, where do we manage risk against because of that? Let's go intraday chart. Yeah, I don't see a clean entry point right now, but definitely a name if we pull back a little bit, if the market pulls back, we tighten up, a name that I want to keep on a watch list. Thanks for pointing this out. Definitely could have taken it today as it took over the high from 11.12. Manage your risk against the low of the day. That would have been 1.2%. SGH. And coin. Last one we'll talk about. I had a lot of hope for coin. I had a large position in coin. Gap down on earnings. Kind of a bear flag and then reverse lower as the market continued to push lower. Yeah, really aggressive sell-off. Crypto aggressively sold off as well. Now we saw a bounce in crypto. We saw a bounce in this, up 8.8%. A- group strength rating, so decently strong group. Midway through relative strength there, but we're under the 50-day. We're under a round number at 300. That area lost support. So until we get over 300 and that 50-day simple moving average, until we see heavier volume on the way out versus we saw heavier volume on the way down, lower volume as it bounced today. I want those to switch and to get over the 50-day before I trade this, but super strong earnings, super strong sales, and after-tax profit margin. I think this does have a lot of long-term potential, but we can find a way to manage risk. And after an 8% day today, we're still finding resistance at the 8 EMA. So we'll see how this trades, but not something that I want to get involved in just yet. All right, let's see, Chad, you come to the stream all the time. We'll get to forward. All right. 97 relative strength, good. Composite rating 88, A plus group strength rating, check. Sales or earnings plus 183, 487, 137, then negative 22. Not awesome there. We did pull back. Actually, no, we probably gapped up on earnings. It's probably after hours. Sales -9, +6, +38, then -5. After-tax profit margin still profitable. Within the group, third strongest stock on relative strength, fourth on composite basis. That's good. It's in a strong group, A+ group rating. Fund ownership steadily increasing from June of 2020. Now we're at 1731. Let's check the forward. So yeah, nice move off the low in the base, 61%. You saw a little bit of a pullback and then popped on earnings, even though it had kind of disappointing earnings. Like many stocks, volatility increased, kind of getting that megaphone here, but it's still holding up better than the 50-day moving average, which that's where the NASDAQ and S&P were down. We push higher, closed above all the key moving averages today, and we do have kind of, I don't know, a one-day pivot through there. I wouldn't call that a pivot. Maybe a downtrend line to work with as a potential entry. So what I'm looking at is maybe second half of this week, we pull back, tighten up a little bit, and then we could use both a downtrend line and a flat top entry point with today's high, 2007. That's also basically a round number. So keep that in mind as well, kind of putting some different buy or supply zones together at the same time. It's in a strong group. I wouldn't mind trading forward, especially because fund ownership is increasing. But we gotta manage risk still. Stop under the low of the day today, 3%. That's fine. We do have good support. We got the 20-day, the 8-day EMA, and a volume shelf. So a lot of things are coming together for this trade. I really like that you pointed this out, Chad, because I'm gonna put this on my watch list as well, put some alerts on it. But ideally, we get a couple days where this trades sideways and then we attack it from there. All right, that's going to be the Midweek Movers live stream. If you guys enjoyed the stream, please leave a like. It helps YouTube push this video out to more traders. We're so close to 6,000. I would love to hit 6,000 subs before the end of the year. Nice round number so we can break out into 2021. So if you're not yet subscribed, please subscribe. I do this live stream on Tuesday, then a breakout watch list on Sunday during the day. Give me a follow on Twitter. I'm Stock Trick Nick there, and Instagram, TikTok, Facebook, all those things. Stock Tricks with